Joining us now, Craig Irwin from Roth Capital Partners. He currently has a neutral rating, but a share price target of $250, obviously well below the current price of around $1,200. Craig, good to see you as always. First and foremost, how surprised were you by that delivery number?
You know, I think everybody was surprised by it, or else we wouldn't have seen the 13, 14% move today. You know, I thought it would be strong, but that was really pretty shocking. You know, I remember not so many years ago where we wondered if they would do 40,000 units, and now they beat by more than 40,000 units. That's just an impressive result.
And clearly, with your share price target, Craig, of $250, you think it is going to significantly revalue to the downside. What is the trigger, the catalyst that leads to that?
So the way that I'm approaching it is I have a neutral rating, right? I'm not calling for a sell. I'm not calling for a short. I'm very clear to say I wouldn't short it. I think they can continue to beat expectations. There's levers that they can pull for growth, both the mini car, the entry into India, things that I've been talking about for over a year, that are going to deliver upside versus analyst estimates over the next number of quarters. So the rationale on the $250 price target is simple. It's that Tesla is egregiously overvalued. You know, you look at the company, they did just over 900,000 units this year. And Toyota did, you know, what, 9 million? You know, they did 10% of Toyota, but they're valued at $1 trillion versus $300 billion for Toyota. There's no reason that Toyota can't develop compelling EVs and have those in the market and maintain their dominant position globally. You know, just like the rest of the automotive OEMs, you know, there's nothing intrinsic about Tesla that's going to stop these other companies from successfully introducing compelling models. And that's why we've been ringing the bell saying 500 EV models on the road by 2025. Many of those are going to be very successful and very interesting to consumers.
So just to be clear, Craig, you're not calling for people to sell. You haven't got a sell rating. So in fact, if that $250 price target was hit in the year ahead, you would be wrong because you're not telling people to sell the stock.
What I'm saying is it's egregiously overvalued, and that I think that people are far better off. But you've got a neutral rating. So the neutral rating is saying don't short it. So you have a distortion in the market. Tesla's valued at more than the rest of the automotive industry combined. The increase in the share price today on an equity basis was almost equivalent to the combined equity value of both Ford and General Motors. That's shocking. These are iconic brands making actually far more money than Tesla that have, you know, really interesting and I would say almost exciting electric vehicles coming to market. And, you know, really there's 2 points. There's 2 points to make from this, right? One is demand is tremendous, but everybody faces the same demand. Both those conventional OEMs as well as the emerging OEMs that are all introducing electric vehicles. Musk has done a great job getting out front, but demand is fantastic. People want to own these vehicles. And I would say, actually, I think that there's another key point, which is the traditional automotive industry is probably underinvested. If you look at the valuation of Tesla at $1 trillion, you know, a big multiple versus Toyota, which has an order of magnitude more sales. You know, people have been overly focused on the wrong things. The last time it was sexy to work in the automotive industry is in the 1950s. And, you know, in the last few decades, people have been talking about pensions and stranded assets and the benefits or impediments of union labor and distribution inefficiencies. These things all become irrelevant when you have compelling portfolios that deliver profitable vehicles that are what consumers want. And I think that there's no reason that many of these companies can be very successful introducing vehicles and having people buy them in the millions over the next few years. Tesla's obviously going to be in the millions pretty soon, which means there's a distortion. Tesla's overvalued. Would I short it here? No. I think he's got some tricks up his sleeve. I think Musk is a great CEO, and he's really transformed the automotive industry.